Friday evening. Hopefully you all had a great week. And hopefully for this last month, you have been learning a lot, getting together with your groups and learning and just, I know we've seen a lot of traffic and emails back and forth with questions related to either stock picks or the process. So hopefully we can go through a couple of those things and level set again this time. So tonight we are just going to jump right in because we have your team presentations just to see how you all did. We're going to spend about 5 minutes per team going through each of those where you will share with us what you picked, why you picked it, kind of the philosophy or strategy that your group actually has. And we'll do a little bit of Q&A after that. The leaderboard portion, we are not going to be able to provide this evening for a couple of reasons. One, we need to make sure that everyone is comfortable with the Google Drive. So if you don't send in the information, we can't create the leaderboard month to month. So if you all can, if you're having problems with that, let us know and we will circle back to you to make sure that you're familiar with it, especially for that tracking sheet. And let's see, after that, after your presentations and Q&A, we will have a speaker, Joyce Bond, who is the Vice President of Franklin Templeton Investments, and she's going to cover mutual funds this evening. So this will be our next category to go over for this month, where you will repeat the same process. You're gonna figure out which mutual funds make sense. You're gonna research them based on some categories that she gives you. And then your teams will go to work, put together your presentation, and then we'll be back again the following month. Is that good?
Yep.
Okay. So Jennifer, how do we want to select the first team for presenting tonight?
Well, I see you went ahead and ordered them in ABC order. So we can either do that, or if anyone wants to go, any team, any group wants to volunteer to go, we don't want to take that away from you if you have a burning desire to go ahead and go first. Or we can just select.
We ready.
You're ready. What
Yeah,
team are
which
you?
team are you?
We are the legacy builders.
Legacy builders.
And I
All
must
right.
say that the team names are so creative.
It definitely is. And so with legacy builders, I think we need to give them the ability. Does everyone have the ability to share their screen, or is that something that Justine needs to do?
Everyone has the ability, yes.
Okay, great.
Thank you, Justine.
All right, so legacy builders, when you are ready, go for it.
Hi, everyone. I'm Jade Lockhart. I'm going to be presenting for our group. So I am trying to share my screen now.
Jay, why don't you give us your class year too, ladies, when you all, just so that we can get to know one another better, okay?
Yes. Let's see. Can everyone see my screen okay?
We can.
Awesome. All right.
Beautiful.
So we are the legacy builders. So I am Jade Lockhart. I am Spelman class of 2020, and I will be presenting the presentation. And then we also have Iretta Kearse in our group, C. Suzette, Julianne, and Quaylee. So these were the stocks that we initially evaluated with our group, and we all took a portion of these stocks and did background research on them. And after doing this research, we all picked out of the stocks that we compiled one that really would be great to look at as a group. And so in the end, we decided that T-Mobile would be the best stock for us to collaboratively invest in. We use Yahoo Finance as well as Google Finance to be able to do some background research. And we, as a group, we're collectively interested in long-term investing as well as weighing low risk. And so when we were evaluating T-Mobile, we looked at, what has the growth been in the past? And we saw that it had been pretty steady within the last 5 years, but also looking in the future. So T-Mobile recently acquired Sprint and they had a merger. And so as a result, they have this huge 5G network that is really encompassing a lot of the nation's 5G. And so we know that post-pandemic, not only were they able to have a really great growth within the pandemic, but looking forward, the company is going to assumably, continue to have great growth. And we also looked at the price of the stock. And so at the time when we were looking at it, which was February 28th, it was around $100, which was the current monthly deposit that our group had decided, $100. So that is our presentation, and we chose T-Mobile.
All right.
Excellent. So as we go along, go ahead, Jennifer.
So tell me, I'm curious, Jade, and Legacy Builders, when you guys were evaluating, who did you compare T-Mobile to?
See, Suzette, you're on mute.
We compared T-Mobile to Starbucks. Starbucks was our first pick, but we looked at T-Mobile, and T-Mobile was less volatile than Starbucks and had more promise than Starbucks.
So when you compared T-Mobile, you didn't compare them to like their actual competitors, or you just compared different stocks that you were interested in?
We did both. We did
Okay.
both. We did a combination of both.
Okay. And then, so in terms of their direct competitors, who were the direct competitors of T-Mobile?
Team, I'm gonna need your support. I believe it was Verizon, and AT&T.
Those are the other two, yes, that we looked at. Things that we grouped in a sector, we chose one from that sector. And so out of the telecommunications sector, cell phone sector, we chose T-Mobile. Out of the consumer goods sector, we chose Starbucks. And so since you saw on our slide, those were our top two. So now that we found a top in each sector, we then looked at the two of our tops, regardless of sector. And so we have some very heavy Starbucks users. And so the growth had been great, but in the pandemic, not only did they cut back, but also we saw the stock cut back. And even when T-Mobile just acquired Sprint, they held steady through the pandemic and just now are cutting back because of finally getting the acquisition together. But since we all decided that we were long-term investors, we're thinking post-pandemic being 5 years, we did not see cellular telecommunications, that sector pulling back at all, as opposed to Starbucks pulling back because people may or may not be going back into the city because a lot of large companies are letting people work from home. And just like two of our members who used to be heavy in Starbucks, they have found ways to cut back and also almost eliminate because they're now making their coffee at home and don't feel that they will be going back to their same level. And the other caveat was that we wanted to pick stocks that we were familiar with because in all of our research that says pick something that you're familiar with, so and that you understand and use. And so one of our heavy Starbucks users, she wanted to stop paying for her Starbucks and owning her Starbucks. So, but then and that was almost the winner until we got to the second group, which was the T-Mobile, and then T-Mobile took over.
That's great. I just quickly went to look at the stock price and I wanted to clarify. When you all made your decision, your stock price was set on February 28th at $100 per share. Is that accurate?
I think it was 106.
We were at 106, but
Okay.
by the time everybody in our group got there, so we had one member who needed to choose a vehicle, and then we had, since it was more than the $100 allotment, We had other members who needed to put more money in. And so if you look at our, what's it called, Suzette? The
Tracker.
tracker. If you look at our tracker, you'll see that we range between 119 and 120 in purchase. And also in our tracker, I'm using the Google Finance link in our Google Sheet. And so it's always giving us the up-to-date price. And a few of us made $1. We have an increase of $1 up to $3 today because the stock rose to 123. I want to say was the last time I looked at it around lunchtime.
Yep, I just checked. It's at 124.68. So that's really amazing. And you can see how quickly, you know, a stock can move. And you all, I would just encourage you to start paying attention to the beta, right?
Yeah.
That was one of the areas of criteria to see if the volatility is actually matching what you're seeing month to month, if you're not tracking week to week.
Yeah,
So
beta is one of our lead trackers because none of us like volatility. So if later on, if you want to put a pin in that, we'd like a little bit further explanation on, we know it should be close to 1, but we weren't sure if we could get some more clarification that would help our group out.
Okay, great. We'll take down those items so that we can circle back. So we were going to spend 5 minutes per team. Does anyone else from the group have a question of
Thank you,
the
ladies. That was
legacy
awesome.
builders?
Or anything to say from legacy builders? Anything else? Okay.
Great job, ladies.
Thank you so much. All right. All right. So
I
who's
just want
next?
to real quickly show our tracker. So there we are. Our lowest purchase price was 119.02, and today's market value is 124. And so there are our gains and losses for our group.
Excellent. Well
And
done.
is this in the Google Drive in y'all's folder so that we can access it?
Yes,
It is.
Absolutely.
Yes.
Thank you.
and like I said, the only update to the original is here for current price. We're using the Google Finance.
That's perfect. Thank you.
Great. Thank you, Aretta. Okay, team 2. Volunteers?
True Blue novices. I'm just calling out names, okay?
We'll
I'm ready
go.
to present.
Yeah, we'll go. This is True Blue Novices. I don't know that we have a presentation, but I will say that we learned a lot, and we looked at like 5 different stocks, and what we do have an analysis. I think Kai is going to show that in a minute, but of the stock that we looked at, we decided to go with Under Armour. And the reason that we chose that, because we were new at this, and one of the stocks that we looked at that was really performing well was the M&T Bank, but the stock was like $147.36 approximately per share. So since we are novices, we have decided to do the $100. And we felt like with the Under Armour, we could buy 4 to 5 shares with our $100. And that was something, and the competitor that we looked at was Nike. And one of the things that Under Armour is doing, they are kind of rebranding themselves in the sense that they are going to be a little bit more exclusive. They're coming out of some of the discount stores, so they will be kind of like your Nike stores. And so the branding is going to be a little bit different. And so that is the stock. It has gone down. When we were looking at it initially, I think it was 23. So it has fluctuated. So it looks like at the close of the market today, it was $22.66. So Under Armour is what we've chosen. And we have Jennifer, Kai, and Jean. Do you all have any other input on our stocks and how we chose?
Yeah, this is Kai. Oh, one thing, when you see the net income,
We forgot to change the color. It is not 92 million in the red. It's actually in the black. We just forgot to change the color coding on it. So we were really concerned about how many stocks, because we're all real novices on there. So it seemed to be the best bang for the buck. It had a good market share, and we liked their motto of they were pushing through. They decided to pull out of all like retails like Kohl's and focus on sports performance. And they've seen an uptick because of post-pandemic. People just don't want to look actively leisure. People are actually trying to work out. So this has worked well for them. So we thought it was a pretty good stock to start with.
So I'll also add that the price that's showing there is $21.89, and that was from about 2 weeks ago when we first met together. And so today it did close at, I think,
2266 is what I,
22.66. Okay.
yes.
And as a team, I mean, when I say we learned just
A
even
lot.
by opening brokerage accounts and
Right.
the pains of that.
Yeah, that took a half a day, but at least I have one now. So I have a half a clue now versus being clueless. So we did really, really, and I don't want to take up a lot of time, but I was so afraid to open up an E-Trade account because it was asking me questions that I didn't totally know the answers to. And after I couldn't get into E-Trade, I said, what the heck, you can always go back. And I was only having $100 a month taken out. I said, so how bad could it be? But just the process and learning the language and the lingo, the true blue novices, we have really been able to feed off of each other because we each kind of had a little bit of knowledge here and a little bit of knowledge there. So we learned a lot.
I love it. I love it.
One thing I just want to mention to you all is that's an interesting strategy, right, that Under Armour is taking on, because if you're pulling out of mass market to now compete with the higher end, their customer base is going to change just a little bit. And coming out of the pandemic, right, where people still may be laid off or seeking work, things like that, even though more may be working out, just watch that and see what the predictors are in their initial strategy, whether or not you're going to see that long term. So when you start listening in to those earnings calls over time, you'll be able to recognize, they hit the mark, or nope, they were a little bit off. So great job.
And I love this. I love what you guys shared because I'm a nerd and I like looking at numbers. I think presentations are great and pretty presentations are amazing, but I love a good spreadsheet, right? So I love that you guys showed the comparison. What that tells me is you probably started off with Nike. And then if I'm right, did you pretty much just make the decision on who to invest? I know you guys did your work, but was it the price of the stock that kind of led you really to Under Armour?
It is.
Yeah, it was.
We did start with Nike. Nike was the company that was listed. And so when we looked at the competitors, Adidas was a competitor, Lululemon was a competitor, and Under Armour was a competitor. And so those companies are all really good companies, but then we wanted to really kind of understand what was happening with the stock a little bit better. We looked at that price, and that was one of the big deciding factors.
Yeah. Did you guys, because I noticed, in their net income, in their revenue, so in 2018 and 2019, they started going down, or maybe it was 2017, 2018, they started going down. They started to rebound in 2019. Was there anything that was like, oh my God, pay attention to me, or anything that you guys were like, oh, wow, I wonder if they're going to be able to pull this off based on that? Was there anything that came out of that made you want to think about it?
Well, we looked at what made them go down. It was part of that athleisure, where when the other companies were going to athleisure, and because people wanted to, look cute and look like they're working out, they still wanted to be performance based. They wanted to, they're going towards the performing athlete, not just the cute looking like an athlete. And so so we know why they went down. And so now that with the change, we know why they should or could possibly go up also.
And they're under new management too.
Right. New
They
CEO.
changed their CEO, and he's really focused on how they're going to move through, and their whole thing is they're moving through this, that you're going to have to progress forward.
Mhm.
So I like the message, and at that, like I said, at that price point, I can live with it.
Yes.
Well, great
Awesome.
job, ladies. It
Thank
does not
you.
seem as though you are novices. So
Exactly.
great job. We're going to move on to team number 3. Do we have a volunteer?
Stock Queens, we can go next.
We'll go.
Sandra,
Yes,
Oh,
which
Go
team?
ahead.
the Stock Queens.
Stock
Stock
Queens.
Queens.
Okay.
Okay, share my screen here. Can you all see my screen?
We
Yeah.
can see it.
Okay, great. Okay, good evening, my Spelman sisters. My name is Chandra Britt Armstrong, and I am part of Team Stock Queens. Let me introduce you to the team. All right. As I said, I'm Chandra Britt Armstrong. We have Queen Cassandra, Queen Beth, Queen Camille, and Queen Crystal. And after many hours, days, and nights of research and decision making, the Stock Queens recommend Apple. This California corporation was established in 1977 and has a lot of products that we're all familiar with, from smartphones, personal computers, tablets, wearables, and accessories pictured below. They also sell a variety of related services pictured here to the right. Their competitors are some of the obvious ones, such as Google, HP, and Samsung, but others that may not be at top of mind consciousness, such as Pandora, who competes for their iTunes, Netflix, who competes for Apple TV, and Bose, who competes with their Beats. But Apple is a competitive leader. Their end-to-end product solutions are second to none. Their designs they develop nearly the entire solution for its products. We all are very familiar with their trademark and their brand, their long established reputation. And when it comes to consumer protection, well, they protect their users' data and build safeguards into their operating systems and apps. So the high quality and the unique products are second to none. So what's new with Apple? They're using the 5G technology in their iPhone 12. They're at the Series 6 of their watches. And looking here to the left, you'll see a picture of the Black Unity watch. This awesome black, red, and green band has an inscription in it that talks about truth, power, and solidarity. So Apple has a commitment to the Black community. They've also welcomed leaders from 13 app companies in an entrepreneur camp for Black founders and developers. They're committed to the community, where they've donated $10 million to a diagnostics company to ship more than 15 million COVID-19 sample collection kits across the country. We see them in many stores, and the Target Corporation has actually announced that it will double the size of Apple shops in select stores. So I've talked a little bit about their social consciousness. Let's talk about their environmental consciousness. They use low carbon materials and create energy efficient devices. They're committed to 100% recyclable and renewable materials. They use artificial intelligence to recover useful materials from old devices. And their future goals include creating products entirely with clean energy by 2030. So now I'm going to shift and pivot to some of their key financial data. I want to start with their net sales. As we see the trajectory from 2017 to 2020, we see an increase, except for in 2019, there was a slight decrease. That's thought to be due to a decrease in sales of the iPhone. For the iPhone represents over 50% of Apple's revenue. We'll see that same decrease in their net income in 2019, but overall, a nice trajectory. But as a stockholder, I'm most concerned with the return on equity. And as you see, it has a consistent increase in return on equity between 2017 and 2020. And you'll see that same consistency with their earnings per share. I've listed here also some key ratios, and there's a lot here on the slide that you can look at, but I want to hone in on their current price to earnings, which is 32. And that's well under the 40 threshold for a large cap stock. Their price as of close on Thursday was 122.06. And today I believe they closed at 121.40. So it comes at a good price, as you see the 52-week stock price range. So in considering all these variables, we chose Apple because it's a well-established, highly recognized brand, an innovative company. It's involved in the community, and their strong, consistent growth we experience now and expect to experience well into the future. And so I'm open for any questions. And I also wanted to share our resources if you had any questions as to where we got any of our information.
Great job, stock
Thank you,
queen.
Sandra. That was awesome. I can tell you guys did a lot of work. And I think that's great. Was there anything that surprised you that you didn't know about Apple, that you guys didn't know about Apple?
I think their commitment to the Black community was very surprising to me and very motivating for me in choosing this stock. We had a hard time. We looked at several. We were really trying to decide between PayPal, really struggled between that, Target, and Dollar Tree. So those were, I think, the primary ones. Also, there was one more we presented and really we had a tie. Cisco was the other one, yes.
No, I think that the fact
go
that
ahead.
you all included the social consciousness as Black women, you know how we see there's cancel culture out there, all these things, and sometimes we have no idea who's behind some of these companies. And so we've given you the hardcore metrics, right, from a financial standpoint in order to evaluate a company, but you may want to add into your repertoire. Who are the CEOs? Are they representing the values that we have as a community? And to determine whether or not you'd like to make that investment. So I too learned about that Apple Watch. So thank you for sharing that. And it just is another feather in Apple's cap in my mind, because they are also investing over $100 million in our HBCUs. And that was an announcement that they came out with just not too long ago, within the last month. So well done.
Yeah, I was just going to touch on that same thing. What I think, you know, as you guys start to go through this process, you may adapt, just like Adrienne said, outside of just like the financial metrics of looking at a company, you may start, and I tend to find that this is most important with women, that you will develop things that are important, whether it's environmental. How are those companies doing, you know, environmentally? You know, are they taking out or are they putting back in? How do they treat their people, right? That's important. What type of governance, you know, how do they operate? And so, and then this other lens, you know, the lens of women, you know, where you have, you know, companies that make the list of best places to work for women. Why is that? And so you may see that, you know, as an overlay. And then also, what is their commitment? Because in this last year, many, many companies committed to Black Lives Matter. Well, where are they putting that, right? Where is that commitment showing up? So I thought that was amazing, actually. That part was really, really great. Thank you.
I wanted to dig just a little bit deeper. You all mentioned the PE ratio. And I think, Chandra, that you said that it was, you were getting to the point, to the fact that it's undervalued. Is that where you all were going with that? At $32.90?
Well, we were looking at some of the cheat sheet that Jennifer shared with us, and so on those key ratios, she mentioned for a large cap stock that we would want to have that value under 40, and so that was one of the pluses with that. Our price to sales ratio was a little high, so that was a little discouraging, but the PE ratio definitely helped us in feeling a little better about it.
Very good. Other questions? Okay, well, we'll roll right along to team number 4.
So who do we have for team 4? Who do we still have left? Blessed Beyond Measure and the Spellman Blue Chicks?
Oh, we'll go. Spellman Blue Chicks. We can go.
All right.
Do I have to wait until?
You're good to go.
Okay. I still see something that's up, so I wasn't sure. Let me try to see if I can.
Chandra, did she stop sharing?
She has to stop sharing.
Oh, okay. Sorry about that.
There you go.
Oh,
Okay. I'm sorry. Let's see. I had it up, but I don't see it now. Let's see. I'm sorry. Let me go back and see if I can pull it up.
Simone, I have my PowerPoint pulled up if you want me to share, and then you got it.
Okay. Okay. Can you guys see it now?
Yep.
Yes.
Okay. Sorry about that. Okay. So my name is Simone Corbin, and our team is Spellman Blue Chicks. And we have our investors in our group are Talisha Bell, Tracy Bowling, myself, Sally Joseph, and Robin Stokes. And the stock that we chose is PayPal. We actually, each of us had come up with a few other stocks that we were looking at. We were looking at Dollar Tree was one of them. I know another group here had talked about Dollar Tree. We were looking at Beyond Meat and Amazon. Amazon was a big one as well. And so we ended up discussing between Amazon and PayPal. So we kind of went back and forth discussing which one we wanted to choose between the two. Amazon is definitely one of those larger ticker items. Amazon stock price, their stock price was $3,016.49. So we knew that, of course, we would have to go with a fractional share with that one, and it would take forever before we could even get one share. So we kind of, we discussed Amazon, we discussed PayPal, and decided that we would go with PayPal. We always, all of us has a working relationship with PayPal. We all use it, and we all discussed that we wanted to work with something that we all are familiar with and can relate to. And so we decided that we would choose PayPal. Their stock price is hovering around $270.85. It's hovering around that price. And I'm, just looking at it over the past week, since Monday, it's been going down. But if we look at it over the span of like the last 12 months, they've been doing pretty well. They've been going up. So if anybody wants to kind of jump in from between Tracy and Robin, just let me know, just make sure we don't miss anything. But PayPal, everybody's familiar with PayPal. It's a leading technology platform that brings together digital payments. It basically brings along digital payments and mobile payments on behalf of consumers and merchants worldwide. They provide safe and very simple ways for businesses of all sizes to accept payments from merchants on websites, your mobile devices, any applications really, as well as any offline retail locations through a wide range of payment solutions. They're committed to democratizing financial services. So, you know, you have people out there that may not have credit cards, especially a lot of the younger crowds that may not have credit cards. Well, PayPal, that allows them to make purchases without even having a credit card. So, you know, I kind of like that idea as well. PayPal, they're able to empower people and businesses to come together and thrive in the global economy. Their goal, PayPal, their goal is to enable consumers and merchants to manage and move their money anywhere around the world, anytime on any platform using their device. Their combined payment solutions include PayPal Credit. I didn't realize they had credit cards. Braintree, Venmo. A lot of us are familiar with Venmo, Exxon, and iZettle products. I wasn't familiar with those two products either. And those are just some of their payment platforms that they use. The industry competition, they have quite a bit. They compete with the banks, of course, the banks and the financial institutions that use a variety of different payment cards like Visa, MasterCard, and Discover, but also their competitors comprise of a lot of the global digital payment markets like Square. A lot of your small, you know, businesses use Square. That's one of their major competitors. Apple Pay, a lot of people are using Apple Pay these days, especially with the contactless purchases. Alibaba, that was very new to me. Alibaba is basically China's version of PayPal. I didn't realize, maybe you guys may have known, Alibaba is huge, huge. I mean, it's probably even bigger than PayPal. I'm not quite sure, but it really is, it's big. Stripe is another one of PayPal's competitors, as well as Zelle. A lot of us use Zelle through our banks where you can exchange money among other Zelle subscribers. So those are the main competitors that PayPal has. And then PayPal's, their competitive strengths are the two-sided network, where they're trying to bring together the merchants that are selling items as well as consumers. That's one of their competitive strengths that they have. Scale, they globalize, they're very globalized, 29 million merchant accounts in more than 200 markets around the world. Their brand is very recognizable and very trusted. A lot of people use PayPal to pay their bills, you know, to make purchases, Braintree and some of the other products that we talked about. Another competitive strength that they have as well is risk and compliance management. They use tokenization. It helps them to keep customers, you know, card information secure. They process legitimate transactions around the world. People feel comfortable making transactions simply because of, you know, they have different compliance management processes in place, as well as regulatory. They have regulatory license that that they're held accountable to as well. And PayPal, they're able to operate in markets around the world. So those are the five major competitive strengths that I think PayPal relies on. Let's see. And then finally, the last page, it talks about their financials. We looked at, we did go through, we looked at pretty much everything that Jennifer provided in the Excel spreadsheet. We looked at, let me see. They don't have dividends. They don't pay out dividends, of course, but we did look at all of the different metrics, and we decided that looking at their revenues, they did have quite a bit of growth, strong growth between 2019 and 2020, 23% increase in their net revenues from 2019 at 17 billion to 2020, 21 billion. And their net income, they did really well going from 2019 to 2020 as well. They had an increase of 71% from 2.4 billion in 2019 to 4.4 billion in 2020. So that's pretty much it for what we have come up with for PayPal. And we did make our, let's see if we can bring it up. I don't know if I have it up, but we did make some fractional shares, and we made some purchases as well. Robin, do you have it up? Let me see if I can find it right quick. We made our purchases between Wednesday and today. So we've been monitoring it. Robin, you don't happen to have it up, do you?
Not handy, but hold on. But
Okay.
With questions and pull it up if we need to.
Okay. So does anyone have any questions?
This is Kai from the True Blue Novices. I had a question. When I was doing research, is it by stock, by each stock, whether they allow you to buy fractional shares? I'm just curious.
No, you can actually buy it based on the amount that you want to spend. For example, with PayPal right now, well, no, this is Tracy's. I think at the time Tracy may have put this together. It was $273. And so if you want to buy $100 worth, I think that's like 0.4% of PayPal. So you can buy a fractional share just based on the amount that you want to invest.
Yeah.
Okay.
Yeah, most trading platforms, or at least the ones that we pointed you all to as a resource, all allowed you to buy fractional shares, and it's completely based on, yes, your budget, not per individual stock.
And clearly I probably, when I was trying to do a fractional share, I was doing something wrong on my platform. So I was just asking.
Yeah, I think some of us had some challenges with it because I was going to do it too. And I know Tracy had a challenge. For me, I know it was just knowledge. I never knew you could buy a fraction, buy fractional shares as well, but they make it affordable for every consumer.
I think the easiest way to do it is to just purchase by the dollar amount that you want to spend. I use Fidelity, and you have an option of either purchasing a quantity of shares or a dollar amount. And I decided I was going to purchase $100 worth. And I just said, buy $100 of PayPal, and it determines what that fraction is. Now, what I thought was weird, and I was really confused after for a while, and I kind of just let it go and said, okay, maybe the price dropped, because I made an order for $100, but when I look in my account, it said the value was $99.42 or something. So right. I'm assuming maybe it already lost value. I was really confused about that part.
I think I looked at that too. I had to figure it out. And then once I looked at Jennifer's spreadsheet, she had already put the calculation, the formula in there. So it's based on the fraction that you purchased. That value is based on the $100, which is what, a little bit less than half. Is that right? Yeah,
mine was 0.416, but still, I mean, I told it I wanted $100, and when it was done, it wasn't $100.
Maybe you can explain it better, Jennifer, but because you had the calculation in there, and that kind of helped me understand it.
So it could be a price drop. It could be that it got you as close to $100 as it could, right? Or it could be that there are some fees, that are included in that.
Fees.
No,
Yeah,
we
I didn't
have
see
any
any fees. I was looking to see. I couldn't, that's the only part I couldn't figure out. So I think it must have dropped maybe.
That was the one point that I was going to interject just with respect to PayPal over the past, if you're looking at PayPal over the past few days. And we made the decision and then looking at what's been happening with PayPal over the past few days. One of the larger investors has sold off some of theirs, so the stock price has gone down.
That's right.
And so, but all of the key analysts are still saying that PayPal is a good buy, that it has gone up exponentially over the past, if you saw from the revenues that Simone showed, has gone up over year, the past few years, and are still recommending it as a buy. So just part of being in the market from when we made.
No, I appreciate that, Robin. I was going to ask you, in your metrics that you showed, PayPal was chugging along, going, everything was moving in the right direction, right? That we like to see. And then you see a pretty significant pop for 2020. What accounts for that pop that happened in 2020? Just across, was there anything, other than normal? Because it was a pretty significant pop in their revenues.
I think a lot of that increase is just due to the pandemic and everyone moving to an online platform. So that you're now, a lot of dollars are now flowing through that space. Whereas before it might have been diversified over in person, going brick and mortar stores and not so much the online platform. So they benefited from that shift in use.
Contactless payments, right?
Yeah.
Which I just wonder if Venmo, like, I don't know if you guys even broke it down, but how much of that was Venmo, from that,
Yeah, I'm not sure, but I also remember reading that they do really well in their revenues in their international sales as well, which I would not have thought of, because they charge more fees when for their transactions, for their international transactions. They charge fees, but they don't charge fees for, when we're buying, if I'm buying something for someone domestically, there are no fees, but they're real big internationally as well. And that's where they charge their fees.
I think PayPal also ventured into cryptocurrency this year, didn't they? Or in 2020, which is kind of a hot topic now.
Yeah.
And they had an acquisition of a company that has a platform that kind of merges with theirs that allows for like discounts in online shopping and everything. So those pieces may have also contributed to the uptick in 2020.
One of the things that I was just going to mention is, ladies, if you this is your money, right? So if it dropped, you put in $100, reach out, call. They all have customer service numbers. They all have, advisors that are there. So ask, so that one, if you can evaluate the platform that you're on and whether or not it works for you or not, right? But there may be some hidden fees, even though you read the top information. There are some hidden fees sometimes that are included. It could be based on the amount that you invest. If it's a fractional share, they may be charging you a little bit extra for a fractional share because it's not a solid share. So just, I would just encourage you all to treat this, whether it's one share or a million shares, make sure you are keeping track of what's happening with that money, because all platforms have glitches, as we saw with Robinhood over time. So just be sensitive and clued in to that, but you use the 800 number too if you ever have those questions. Okay, we're coming up for our final presentation. This is Team 5, Blessed by Measure.
So, hello, I'm Patrice Francis, class of 1990, and I'm presenting for Blessed Beyond Measure. And we are going to first introduce our team. Kimberly Murray, who is our lead, Pamela Cooper, Patrice, who is myself, Darlene Garcia, Rhonda Hudson, Karen Wood, and Crystal Woods. And we decided, after all of this great analysis, to actually lock into Exxon Mobil. And we purchased Exxon Mobil can we go to the next slide? So we purchased it right after 2/12, and our numbers started at $50.52. And we purchased all the way up and until this week. And some of us have already made over $10 per share. And Exxon, of course, is reflected as a major energy organization. And everybody who's driving right now, for the most part, is still using gas. So our team felt like, out of all of the analysis that we had done, that Exxon would be a smart buy, especially because we weren't putting in too much risk from a financial standpoint. But as you can see, it has already gone up. Last night, it was $60. Today, it got up to $60.80, and then it went up to $60.93. They have had a 3.3% increase overnight due to three major things happening. The chairman of Exxon, actually Darren Walker, has announced that they are going to be making a $2 trillion investment into reducing their carbon footprint. Jeff Uber, who just got placed into Exxon Mobil's position for the board, decided to invest $10 million last night. So he bought up a lot of stock. And then we had one other major incident to occur, and that is people are beginning to drive again. So the numbers went up as a result of OPEC deciding that they were going to shut down production, while we found out that Exxon could push against it with the resources that they had. So because OPEC is putting pressure on the market, Exxon's numbers started skyrocketing overnight. But we've had a good ride, so everyone is really excited on our team, and go Blessed Beyond Measure. Yay! Oh, and by the way, we selected this stock with unanimous consent. So everybody agreed that this was the way to go. Any questions?
So when you guys compared Exxon, who did you compare them to?
So we actually didn't, we looked at other stocks that were affiliated with the gas industry, but most of us went with Exxon because it was on our list. So that was the first thing. We saw Conoco and some of the others, and they have also had great increases since the economy has started moving again this year. So we were pleased with that. We really selected based on price, frankly. Everybody wanted to try to get something for their money, and we wanted to use something that we thought would be applicable to our lives. So Beyond Meat was a strong contender, but too expensive. We went with Exxon, arguing all of the other components within our list for energy, and then we settled on Exxon because everybody's driving.
There's something that came up in the chat, and Beth, you were reading my mind, but she said Exxon has a fantastic dividend. How much did that play into your decision to go with Exxon? Because that's extra money that you get to roll into your account or to cash out. Can you all just speak a little bit about the dividend and how you evaluated that? Or if you even took it into consideration?
Not really. Again, we went with something we could get for our money. So our focus was strictly on a user-friendly option that everybody could agree on. And Exxon just fell into place with that. Yes, I'm a Starbucks fan, but they were overpriced. Yes. So we felt like this was a good buy. It had tanked due to the economy tanking with the pandemic. So we knew it would have to rise as the economy started moving forward. And if anybody else on the team wants to talk to our lovely knowledge base of just coming together for one item, feel free. But that's where we were when we actually went into it. So you just gave us extra information. Thanks.
Yeah. I will say, just to add to that, we did have a very rich conversation about, as much as we know we need to reduce our carbon footprint, we as a country haven't. And unfortunately, and I see Beth Sapp James on the line, that weather in Texas, that incident showed us really the value of energy at the time. And we were kind of saying, yes, it'd be great if, you know, we were all walking and didn't depend on our cars. And, you know we had less uses this past year, of course, because a lot of us have been at home, but things are picking up now. And we just realized, hey, this was probably the way to go when we kind of thought about those factors.
You guys have all done a phenomenal job, actually. We've taken into consideration the environment, whether it's weather, what have you. We've taken into consideration all of the things that may play into your investment decisions as it pertains to social justice and how you evaluate those companies. You've talked about new leadership and changes in strategy for the companies that you have selected. So I would say for this to be the first session, it was outstanding. You all did a phenomenal job. And I think at this point, Jennifer, are we ready to pivot?
Yeah, I know our guest speaker is on. And so I am looking for, because I wanted to just bring up as I get ready to introduce her.
She's there. Joyce is on.
Yep. Joyce is on. And so let me just share my screen real quick here. Okay, come on, Jen. And thank you, ladies. I really appreciate that so much. I know that there are some questions. We want to go ahead and get our guest speaker because I've gotten some direct pings on questions. So let's just hold on to our questions until the end. And so let's see, Jen, come on. All right. Hopefully, can you guys see the screen?
Yes.
Okay, so I want to introduce our guest speaker. Our guest speaker for tonight is Joyce Bond. Joyce Bond is a vice president with a company called Franklin Templeton Investments, and she has been in the industry. So when Adrian and I were looking for guest speakers, we really were looking for someone that was senior and was very specialized in their area that could talk to about the next topic, right? And so Joyce has been in financial services since 1982. She has, just a huge array of financial services experience, starting with Smith Barney. You guys, she's been with Citi. She's actually probably worked with all of the top banks and financial institutions that you've heard of. And so, but she's been in the industry and working in the mutual fund industry for a long time. So she brings a wealth of information and industry knowledge. And I'm so excited because she not only works with mutual funds, she does ETFs, what we call SMAs, which are separately managed accounts, 529s, different insurance products. And so I'm super excited to have someone this senior with this much information that's going to touch on the next assignment and the next area that we're going to get to take a look at. So please help me welcome Joyce Bond.
Well, thank you, everybody.
Hey, Joyce.
I am so excited that I got on early. Because that was one of the most amazing sessions, Jennifer, that I've incurred. And I've sat on more analyst reports and manager meetings that you could fall asleep on. And for the depth and the attention that these ladies put into their research and their work was right up there what I've always encountered on Wall Street. So thank you so much. I'm grateful to you, Jennifer, for even inviting me, and for all of you on this call. She is relentless. There was no such thing as let me think about it. She didn't let me fix my mouth to say anything, but I can do it. And I'm so glad she did. I am so grateful to all of you for just letting me get the actualization of something that I believed in for all of my career. And that is, women are really good and they're really smart. at making financial decisions and knowing how to execute them. And more importantly, Black women have had to do this ever since we had to cook food, work the field, and then take care of the children. So we do have that capacity, and I'm totally grateful for that. But there's one thing I regret. I regret that I didn't go to Spelman. I got to tell you, look what I missed. And I definitely know how to continue the Spelman woman theme. So what I want to do today is kind of share with you, as Jennifer asked me to do, is just go through what another investment vehicle is, and it's called a mutual fund, which I'm confident most of you know what that is. You've had experience with a mutual fund, most likely through your retirement plan that you would have had at work, or just as that first dabble, if you will, because it's a very easy concept, but it captures almost everything that you were working towards and learning today. So I'm going to share my, first of all, I'm going to stop video because I can't stand looking at myself while I'm talking. And I'm going to share my screen. And I want to pull up this one slide. I used this, didn't pull up that slide, did I? My girlfriend. Here we go. This is a slide I use a lot in seminars as I'm helping people to understand exactly what a mutual fund is. And I think it's one of the best graphics you can find. So investing is all about finding opportunity. And we all agree with that. And it's a big world out there where all of this opportunity lies. So what is an easy way of capturing that? If I don't have the time to do the research that requires, it's obvious it requires a lot of research. It also requires what starting point should I be at in order to make those decisions. So a mutual fund was designed to make that easy, okay? Mutual funds have been around since the turn of the other century, but this popularity grew in the 80s once employers began to eliminate or limit pension plans where the employer was responsible, if you will, for the retirement aspect of that employee. 401k stepped in because it was less expensive to the employer, and all of the responsibility went to the employee. So a mutual fund product was the most easy way to get started. And if you were to look up the definition of what is a mutual fund, the first thing is going to tell you that it is a pooled asset, meaning you have a group of investors that put their money into one particular vehicle or a company or a particular objective. And that pooled asset is invested on behalf of the investors. So it could be millions or thousands of investors putting various different monies in at various different times of their lives, monthly, quarterly, once, or annually. And when it goes into the mutual fund, a management team led by usually a few managers, it could be 1 or 4, that has the objective and takes the responsibility of the objective of the fund, they are going to select what securities go inside. So they're going to do that research. They're going to take the overall objective and look for those securities at various prices that would fit into that objective. Now, once you pull it together and package it, you own a share of the fund. Yes, you're going to get all of the returns of the underlying securities, but you're going to own a share of the entire package. And you buy that share at a particular price. So mutual funds trade just like a stock does. The interesting thing about mutual funds is that they're not only stocks in them, but they're bonds. It could be stocks and bonds, because they have different objectives. It's either for growth or it's for income. It could be growth and income. So depending on what the investment need, the investment outlook is, that's how you would choose the mutual fund. Here's another fact. There's more mutual funds trading than there are stocks on any exchange right now. because you can compile them in any which way or format. And so many companies have the same funds within securities in their funds, and yet the returns can look very, very different. So it requires research as much as you put into stocks and or the bonds that you buy. It's the same level of research that's necessary to own a mutual fund. Another benefit of the mutual fund is not only that you buy the share with one price, you can accumulate as many shares as you want, and you get a mutual return. Everyone's going to get the same return. If you put $50 a month in, or you put $50,000 in, you get the same return, right? Doesn't matter, because they trade at the price you buy them at, whatever price they're trading at. The cost of a mutual fund is spread out amongst the entire investor pool. And so that's why the cost of investing is actually low. If you were trying to buy all of the securities that are in a normal fund, and that could be up to 100 different companies, your trading costs would be very high. Your commission costs would be very high. So actually they kept the cost of investing low. So don't let the news fool you. It really is a low cost option than if you were to buy 30 different individual securities. Not that you wouldn't want to do it, but it's going to be most cost effective. Your management team are the experts. So at the company that I represent, we just hire our managers based on their focus, their objectives, what their backgrounds are. Many of our managers have been psychologists, history majors, hedge fund managers, professors, but they have really understood the particular sector, or like I said, that investment objective over the years where they can bring direction. Every manager has a team of research analysts that are doing all of the work that you ladies did, and even to a deeper level. They do have the telephone number of many of the financial representatives of the companies that they want to buy, and they hold regular meetings to keep them updated on what's going on. Whatever public information is available, we do not have any inside trading information. We would all be on the news and fired. So we all work off the same public information, but we have access to it a lot quicker. And the whole idea is, why do I have to own more than one stock? Why should I own 2, 3, or 4? Why not just one bond? Because diversification is a very important step in really investing. You don't want to put all of your eggs in one basket. So when you do build out an investment portfolio, you're owning more than one stock or one bond, because you want to get different opportunities of return, and you want to minimize the loss of value over time. It's exciting to see your stock go up, but it's really disheartening when you see the stock go down, especially if you got all your money in one place. So a mutual fund does change up and down in value, but it minimizes the upside, the downside, and helps to capture as much as the upside as it can. It manages risk for you, which is important as well. Now, you can build a portfolio of mutual funds. You can have growth funds, you can have income funds, you can have funds focused on a specific sector. Like I heard about Exxon Mobil, that's an energy stock. So there are sectors focused on utilities, energy, transportation, information technology. You may want an area of specialization to add to your portfolio because of opportunity that you believe in. Why? You may have worked in that industry. You know someone in your family that works in that industry, and that they're feeling confident about what's happening at the workplace for them. Or like some of you ladies pointed out today, you love the way that this company is just doing things that is important to you, not necessarily financially, but fundamentally. We call that the ESG, right? The environment, socialization, and governance. And so you want to own those particular companies that may focus on that. You want to invest in something that you're familiar with. I always say you should know what you own and why you own it. If you understand Home Depot because you're in there all the time, why not own it, right? Or if you have to go up to Disneyland every quarter and get the annual pass, why not own shares of the company as well? And sometimes you can't outright buy those companies you want. As we found out today, they're expensive, but you can minimize that cost by putting everything in a mutual fund. So mutual funds have become very popular. Like I said, they are prolific in the opportunities that they cover, as well as the numbers that are out there. We flooded the market to confuse people because what we really believe is that you need to have someone to help you manage through the sorting of the process. And so with that, let's kind of move into what are some of the things that you should know about mutual funds and how they are structured. So I'm going to bring up something else here today. And I'm going to share this PDF of a fact card. I have to give you full disclosure that this isn't a solicitation. It's just a demonstration. And just I'm familiar with both of these companies I'm going to show, but I just want to give you an idea of when you look at this document, what is important? What is it telling me? So this is what's called a fact card. And we issue these every quarter because earnings are reported every quarter. And so we're going to be able to give you a full breadth and explanation of performance, how it performed, why it performed the way it did. But what's the fact about this fund that you need to know? So just start out for here. It comes out every quarter. So the first thing you always want to make sure, do I have the latest quarter? It's like a report card. We have
Joyce,
yes.
Joyce, we don't actually see what you're showing us.
Doggone it, I was on a roll. Hold it. I think I have to stop share.
Yeah.
Let's try this again. Don't you hate when that happens, ladies?
All the time. It happens to me all the time.
Okay, I thought I stopped share. Okay. You see the lovely picture?
I see your picture.
Right. Okay, so let's try this again. I think I went too fast. There we go. Can we view it now?
Yes, we see it now.
Okay, so imagine what I just said, all right, on this fact card. So more importantly, a fact card is that we file this every quarter with what's called FINRA. And FINRA is the regulatory, if you will, organization that monitors mutual funds, as well as the SEC. But this is filed with FINRA, and it's our fact card. It's our report card. So what did we do? How did we behave over that period of time? And what is the information you need to know? So like I said, upper left-hand corner, what is the current quarter for this particular fund? This is it. We're not done with the first quarter of 2021, so you won't see information on that as yet. You also want to know who's the company that you're working with. ClearBridge Investments is the investment company that is managing this particular fund known as the Appreciation Fund. Another interesting thing to understand, we are talking about an equity. So those are stocks. And typically when you're investing in equity funds, you're looking for growth. You expect growth of your money. And from where are we getting that growth? In large cap companies. I heard someone mention that today. So we are, there's 3 different kind of asset categories that captures growth over time. Small cap companies, mid-sized and large. So you're looking at a large cap mutual fund, which is going to capture growth over time. Now, typically, almost every company is going to give you an overview. I know ClearBridge likes to give you 3 things you need to know that we're trying to accomplish and how we do it. And to me, it's the quick go-to, right? So what am I actually investing in? In this case, equity securities of US companies. So it's stating right now, it's not looking outside of the US. This is going to be what we call the US domiciled pool of names and securities. They're going to be focusing on mainly, on medium and large cap companies, but they may invest in small cap companies as well. So that's them giving us a little bit of a disclaimer. This is going to be a large cap, but we're looking for opportunities to buy that we believe will grow up to be a large cap, and that's where they're going to find growth as well. They're looking for long-term capital appreciation. So the second thing I would say is this what I want for my money? Am I looking for long-term growth? Is this my retirement, my kids' education account? Or is this something I just want to accumulate because I want to get a down payment on my home in the next 3 years? So as the definition will go, I'm not looking at a short term for this particular fund. This is something I want to give long-term focus on. And in the industry, we typically look at 10 years or more as a long-term strategy. As I said, core equity holdings. Here's the key. They're looking for not aggressive growth. They're looking for what they've termed a balance between reward and risk. And again, what that just means is don't expect this fund to outperform or be risky. That's all the wording is. And then, of course, the third thing it says is that it's looking for companies with effective management, superior earnings growth, and strong and improving fundamentals. So the reason I wanted to point out that little gray box is every fact card, no matter what the company is going to give you that overview. So it's, again, letting you know, look, this is what we're going to seek after on your behalf. These are the type of companies we're going to look for on your behalf. And here's how we may be a little bit different than anybody else. So it gives you the Cliff Notes view, if you will, than reading an annual report or what we would call the annual prospectus. We all like to give you visuals. That's the mountain chart. And the mountain chart is going to assume that someone had $10,000 at the date that the fund began. There's always an inception date. Some of these funds have been out, like I said, since the 20s, 30s, 40s, and 50s. Some funds became very popular in the 80s, which is a good track record. Some have just started. So you need to know what's the time frame, what's the history, and take into consideration any reporting of performance, because it could be framed. If you had a great 5-year market environment, you should have a great 5-year growth return. So the other things that are important, just FYI, why do we have all of these different letters? Mutual funds have what we call share classes. Each fund portfolio is offered by a particular share class. What makes the share classes different, I'm going to point you on this side, is the expense ratios. Class A share has a different expense ratio than Class C, and then the Class R, then the Class I, IS, as you can see. So the class shares have different expense ratios because they're used very differently. Class A and Class C shares are typically individual type ways of buying this particular fund. R, I, IS, and FIR, those are institutional type shares that are purchased in multi-million-dollar blocks, or they're offered through retirement plans. So the expense ratios are going to be different. Why? Because they're going to carry the cost of being on that platform. We're always looking at A shares typically for our clients, upfront sales charges. What's the price? And what's the return on averages without sales charges or with maximum? That throws everybody. Okay, sales charges, the cost of getting it done. So you could pay up front for the cost of getting in, that comes off right off the top, and then your fund begins and your money begins to work for the duration that it's in the fund. When you need it, there's no exit costs at all with it. So we are required by the SEC to report if you were to pay maximum sales charges and you only held this fund for 1 year, 3 years, 5 years, or 10 years, so since inception, what is the net return of that period of time? Remember, money is going to come out at the front. So of course, 1 year difference is going to look a lot heavy. Without sales charges, in this case, 14.5, with maximum sales charges, 7.93. And they report it that way because we can't figure out, or we can't compute the day that you're going to get started. So the assumption is you bought it at the beginning of the year, you sold it at the end of the year, or you bought it 3 years ago in January, you sold it 3 years later, December 31st. It's just, it confuses everybody, but what's most important is, has the performance been as consistent as I needed? And we typically always suggest understand the inception date. If this fund performed the way you wanted it to or expected to, then now you've got some sort of gauge of how it behaves. Another chart I think, ladies, is important is, and some fact cards go out a few more years. Well, show me every year by year how it performed. And so it'll give you, in this case, the last quarter of 2020, the year to date for the year 2020, and every year performance there. It is going to look at the annual performance. What this can show is if you've had a particular year that you're concerned about. Now, a lot of people will always use 2008 as a litmus test. How did this perform in a year like that? And then how did it recover? You would want to go back all the way to 2008. We don't show that on a fact card because we have limited space and you're only required at least 10 years. But you want to know what was the worst year in the last, let's say, 8 to 10 years. You can identify how badly was the negative side, how great was the recover. Okay, I mentioned the word benchmark a lot, and all fund managers have to identify a benchmark that they're going to manage their fund to. And that also allows the investor to have comparables, right? So there's a lot of growth funds out there. There's a lot of funds that says they're US equity large caps. And are they all being measured against the same benchmark? That's important. That's required. And we identify what the benchmark is. In this case, it's the S&P 500. So you're looking at a fund who is trying to manage against a very broad market index. If there are any dividends that's going to be paid out to an investor, we have to show the frequency of it. Okay, how much, how frequent. These are the categories that we are being compared to. And another number that's important is something called the turnover. And that turnover is how frequently does the manager make changes? Now, typically changes are made because they've reached a particular price mark and they're going to sell at the highest price that they believe that this company can sustain, sell it, get the gains get paid out to the investor, and then they reinvest at an original investment price back into a new name. And those names can be based on what they feel is the most acceptable list of names for the objective. Now, we always have to show the top 10 holdings. Microsoft, Apple, Amazon, Berkshire Hathaway, JP Morgan, in this case, top 10. There's more holdings. How do I know that? Because we have to list. There's 74 names. And you could always go to the company's website and they'll give you the list of the full 74.
Hey,
By the
Joyce.
way, yeah.
Hi, I have to just stop you right here. We actually have another meeting that's going to jump on this same Zoom in about 5 minutes.
Okay,
And
let's
so I
stop.
just realized we've run out of time.
No, we extended the time for.
Oh, we did. Okay.
Yeah, so she can go until about 8:15.
Okay, perfect.
Thank you.
Okay, no, thank you. I love to stay in time. So let's well, I really was going to stop there anyway, because what I wanted to show was there's certain parts of certain information of a mutual fund you do need to know versus just the name. So I always look at it this way. Growing up back in New York, we had a really interesting Methodist church. The women's missionary was either going to Atlantic City, they were either going to the Monticello racetrack, or they were taking the Las Vegas trip. So, but they did raise a lot of money for the church. Point being, I was watching or listening to how people chose a horse for a race. And it literally was about the name of the horse. What kind of clever name it had. Oh, that's a pretty name. Oh, I like that one. Oh, that's what I used to name my dog, and they would make bets on what they thought was just something that was very superficial. It was the name of the horse. Well, you find out later, the breeding, the odds, what kind of, past history it has. All of that was important really to make a bet. And then of course there was luck. In the case of, even stock investing, and then more so in mutual funds, you need to know those numbers in order to make an informative decision. Is this going to be the right type of core holding I would want for that long-term investment, or for an investor that might be a little skittish about today's environment? And oh, by the way, you name the reason. There's reasons to be skittish. The news is going to give you plenty more if you can't think of one. But whatever it is that you feel comfortable with or not confident in, you want to make sure that those parameters are going to address those concerns. And the betas and the alphas, all of that is part of what we call the modern portfolio theory. What the volatility is, just how much risk is being assumed, how sensitive is this to the benchmark, and what kind of linear relationship to the benchmark. If the benchmark zigs, does it zig or does it zag? So all that is really necessary in knowing a mutual fund. And if it was just about it was a no load or a load, it would be easy, but it is important. So just that little background, I'm going to quit there. And if there's any questions toward that, or we could throw all the questions in the question pool, but I really appreciate sharing with you ladies tonight. Thank you so much.
Thank you so much, Joyce. We really, really appreciate your availability to come and meet with us and teach us about mutual funds. Ladies, since we still have Joyce and we still have a few minutes, any questions that you all have? Anything that you
There's a question in the chat from Beth, and she wants to know, are index funds just another type of mutual fund?
It is. So an index fund is going to be considered a pooled asset as well. And typically it's trying to mimic an index, and it will be considered a passively managed fund. A lot of the mutual funds the mutual fund that I went through is an example of what a active manager would do. He's going to have turnover, he's going to have changes, or she's going to make a decision. An index fund typically is going to select specific companies of an index, and it will hold it right there. But it comes under the definition of a pooled asset. Yes.
Awesome. I just saw another question, and I'm since we have you here, Joyce, this is for you. What is the difference between a mutual fund and an annuity?
Yeah, so an annuity is going to be an insurance type product, right? So because it's going to have the ability to remove a certain level of risk from the investment objective. I'm putting it very technically, I know. So an annuity is going to say, listen, we'll give you some sort of return based on a metric. It could be a variable with other portfolios. It could be against an index, but we are going to take the risk of volatility out. And we're going to assume the risk that as you take your money or annuitize it, you're not going to run out. Okay, even if you run out of your physical assets, it's an insurance contract to say that. And a lot of people like that because they can manage the asset much better. They have a predictable deal, and it's usually meant for some sort of capital preservation or income generation. A mutual fund can do that as well, but there's no guarantees. There's no risk management to it in terms of you're only going to get so much on the upside and only so much on the downside. You're going to get the objective. You're going to get the returns of that market in its purest sense. So I look at mutual funds as an opportunity of growth, accumulation of value over time. You want to get that economy that we talked about today. And that annuity is going to say, let's capture what you've got and let's kind of freeze it for a moment of time so that you don't lose as much on the when you begin to use it.
That was great. Thank you.
Thank you.
Any other questions? We have like about another minute that we have with Joyce. Any additional questions, anything anyone wants to ask, get clarity on?
I have a question, Joyce.
Yes.
What is the best way to evaluate the investment manager? Because there's a lot of movement sometimes. They may go from one fund to the other, but you don't get a lot of notice when, they move on, and you may have had someone who was stellar managing that fund and then they bounce somewhere else, and then your performance drops. What's the best way for us to kind of keep a better gauge on that?
You brought up an industry issue, and that is a fund can be as great as a portfolio manager. They became the star, and the star just went away. And the company determines who can be replaced, who replaces them. So you get a new manager or you start with a fund. Usually we have a quick bio on that manager on a fact card in the prospectus. Go a little bit deeper. You have these third-party industries, Morningstar, Lipper, will give you a really unbiased view. I shouldn't say unbiased, but they want to give you their view. Yes, they're pretty rough. They'll give you their view, manager style, manager capabilities. And of course, the website, we have to give full information on history, background, and the biography of that person. And, I always say you do trust your gut. All right, we're good at it. So if that's the kind of style you want to drive your car or whatever your vehicle is, then that would be worth it. But that's a great question. Morningstar is great for that.
Okay. Anything else, ladies? Okay, well, thank you, Joyce, so much for joining us this evening. We really, really appreciate it.
Thank you. I may sneak on some others because these are good.
Okay.
Thank you, Joyce. And I'll definitely be in touch with you.
Thank
Okay.
you. Have a great weekend all.
Thank you. You too. All right, ladies. So as you may have gathered, our next assignment is going to be on mutual funds. And, how do we evaluate mutual funds? So we have a few minutes. I want to go ahead, if that's okay with you, Adrienne, go ahead and share.
Yes.
What I have here. So in each of your folders, you guys will already have a mutual fund folder with this information in there, all ready to go for you, okay? And so this sheet here just kind of goes through, hey, how do you evaluate a mutual fund? This hyperlink here is going to take you to Morningstar, which is what Joyce just alluded to. Morningstar, I use Lipper as well to go check out whatever mutual funds I'm interested, who's performing, who are the managers that are making things happen. And so what I've put together here for you all is what are the areas that you want to look at that's important when you're evaluating a mutual fund. Okay. Yes, performance is a leading indicator. I'm not saying don't look at performance. I think you should. That's important. But there are some other things, right? So yes, how has that fund performed? You want to go ahead. And so when you click on, and I'm going to do it in a second, but when you click on this link here, there's already a fund. So you know how each of your stocks have a ticker symbol? Mutual funds have a ticker symbol as well. And so the ticker is actually, it shows up right before that performance. And so that's where you want to enter the ticker, just like we did with the list of stocks. We've provided a list of mutual funds for you to get started. We're not attached to any of them. They were just, hey, this is where you can get started because there are way more mutual funds than there are stocks, okay? So this gets you started. If there's a mutual fund you want to go ahead and look at, go to town on it, okay? So we're not providing any kind of, we're not saying you have to use those. We're just giving you a starting point. So you're going to want to look at the performance tab, and this is specific to Morningstar, and just take a look in there, right? There's a risk tab. You're going to want to look at the risk. And I've tried to explain on here why looking at the risk is important, right? Why you want to look at the performance. So I'm just going to quickly go through this. So this is just the screen grab of, you know, the risk category versus the return. The manager, right? Oh, the strategy. So what is the strategy of the fund? What is the investment objective? That's really, really important when you're looking at a mutual fund, is if the objective is to invest in small cap growth fund, or is the manager actually executing on that strategy, right? And so in the example Joyce showed us, it was a large cap fund, large cap growth, but there was a little asterisk in there that said, but we may invest in small cap too, right? So, okay, it's large cap, but small cap because, hey, we may need a little extra oomph and growth and we need that small cap, right? So are they executing on that strategy, right? And then the other thing is, you know, she just talked about, Joyce just talked about who's running the fund, is take a look at that management team. Go look at what Morningstar has on the management team, how long they've been doing this at their particular company. Were they with another fund company and were they doing the same thing there? Or did they have a whole different, you know, strategy that they were working on? And then Morningstar and Lipper actually rates the managers as to the execution of that strategy and the performance and the risk they take. So go take a look at that. So I have highlighted each area that you want to take a look at. And then of course, what is the cost, right? Just because a fund has a cost should not make you shy away from it, okay? One of the things that I like to look at is, are they performing despite the cost, right? Do they have great returns? Have they shown several years of great returns, even with a sales charge? Okay. So don't let that scare you, because in your trading platforms, you're going to have no load funds and you're going to have funds that have a sales load. Don't just go with a no load fund just because it's there. But I will tell you that a no load fund, you have to do a lot more work with those types of funds to just see how they're performing. But don't let the sales charge scare you necessarily. Make sure they are performing in all these different areas, even with that sales charge. Okay. And then, so that's it there, but let me just take you really quick. Let me stop it. Or let me actually, well, I should have reshared, but let me go back here. Sorry. Let me go back just so you can see in Morningstar. Here we go. What does it look like? So this is a fund that I picked. And can you see the Morningstar page? Are you all able to see that? Yes, for Invesco. This is the Invesco American Franchise Fund. It's going to default to the performance tab. So this is how it's performed. And you see the lines. It's going to show you the graph. It's going to show you how the fund has performed, the actual category or the strategy, right? And the index, this is going to be tied to the S&P 500 index, if I'm, it should be. So, and then how, how the index has performed, how the fund has performed in relation to that index, and then just the strategy, right? That category. You have your performance data here, but also let me point you to the tabs up here. So here is the risk tab. And my computer seems to be running a little slow. But anyhow, you will be able to take a look at each of those tabs from the performance on without having to pay to see how are they performing risk versus their category or their, right, which is, this is a large growth fund. And then the return versus their category, okay? And so I've given you some information on what that stuff means. So you want to look at that. Then again, look, the people, this is going to go to the management. So you want to take a look at all of this, but I have included sort of the cheat sheet, those areas where you want to hone in on for you. And then we provided a list of like 25, I think, different mutual funds just to give you a start, but it's by no means any indication of where you should actually, what you should actually pick. So here is the on the management team, how long they've worked, and then the actual whole team. So not just the manager, but the analysts that work in that team, how long they've been there and what they've actually done. But I wanted to show that to you all. I know we're running out of time. I believe there may be some additional questions. Adrian, is there anything else that you want to add?
I think you've covered it. And I think Joyce did a great job. There are a couple of questions. So I'm going to ask Gerald to unmute herself. Gerald, do you want to ask your question of Jennifer?
Yeah. Good evening, everyone. How is everybody?
Hello.
So I am Jean, class of 1990. And mine is more of a food for thought than a direct question. But all of us have presented on some wonderful companies, but I can't help but note African-American representation among publicly traded companies is not widely known, if any. And I think of like Slutty Vegans, the FUBUs of the world, OWN, HB Russell, Bronner Brothers. Now, not that all those great companies needed to go public to remain great, but I'm sure many of them have asked themselves at some point, should I go public or shouldn't I? And Jennifer, I just wanted your perspective on the main thing that prevents Black-owned companies from going public and staying a publicly traded company.
Well, quickly, because we don't have a lot of time. Look, I mean, there's so much to peel back in that onion, right? One, could it be access to capital, access to resources, right? That, Black companies don't always have the same access. Do we have access to an investor base, right? People that want to come before you go public to invest, to come into a company, right? Which in your example for Slutty Vegan, I don't think they're anywhere close to thinking about going public, but I'm sure she's had angel investors. She's gotten some grants that have helped her build her business along the way. She's gotten friends and family that have invested in her business. And so, hey, if she gets to a point where she does want to go public, then she needs to get to that next level. And that is tapping into some investors, that want to do, Series A, Series B, all these investment tranches before you actually go public to get some recognition. Usually companies will do this is going to get into the weeds. One, it's access to capital, access to resources, and access to investors, which we haven't been as a community, haven't had the same access that white companies have had. Okay.
The only thing I would add to that, Jennifer, too, is sometimes it's not the best strategy to go public. It's extremely expensive. And think about it as being a founder. And then now, because you're governed by a board of directors, they can take your company in a completely different direction. So, sometimes when you're an author of a book and then you get a publisher and then they change your whole story. it's similar when you take your company public. So it really depends on the reasons why. But the companies that you mentioned are phenomenal Black companies that did not have to go public, and they've survived and done well.
Absolutely. And ladies, I know we have to hop off because there's another meeting coming up. As always, if there are any additional questions, please reach out, either via email or text. If there's anything that was not clear that you need help in, just reach out. We're here to help, okay?
One question. One other question.
Go ahead, Simone.
Are we, okay, I just want to make sure I'm clear on what the expectation is with the mutual funds for us. Are we buying a mutual fund?
Yes.
Yes.
Yes. Each time we get together, you'll buy with that same minimum $100 for the month, right? To test out that category. So this is share information, put it into practical practice. Okay.
Adrian, I have one more question. There are 7 people that are new tonight. How do we want them to be assigned to their groups?
Well, if there's 7 people on, they all could be their own group. They all could be their own group. So if they're
are we going to break it out into groups is what I'm asking you, or do we?
No, we don't have time to do the breakout groups.
Okay.
So for those 7 new folks who have come in, we will assign them to a group, along with give them access to the Google Drive so that they can see who's either on their team if they're placed on a new team, on an existing team, or they will become their own team. So we'll go through that with them.
Okay, so for those 7 people, if you can chat to me your telephone number and your email address, that way I'll make sure that you're added to a group. And I am at NAASC Atlanta. Just send it to me personally before the end of the meeting.
Justine, do you want to put your email address in?
Yeah, I'll put it in there as well.
In the chat so that they have it. Okay. Ladies, this was outstanding. And I feel like we run through everything quickly. So it's going to take a minute to absorb it, but you all have done a phenomenal job. I'm just thrilled to see how well everyone has grasped the concepts and have really dug in. So I'm looking forward to another exciting Financial Friday Investment Club get together. Jennifer, do you have the date?
Yeah, so the next meeting, so we meet every first Friday. And so the next meeting is actually Friday, April 2nd.
Excellent, excellent. So if you need to add that information into the chat for Justine, or if you didn't get a chance to add it, please send her an email. She placed her email address into the chat. And other than that, good night.
Appreciate you.
Have a great weekend.
Thank you, ladies.
Good night.
Good night, sisters. Peace and blessings.
Good night.
Good night.
Good night.